Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all you guys had a very nice weekend and a very nice day off of the markets on the Monday session as well. And in today's price action, well, the SPY and the QQQs pushing on to more and further gains. The rotation in the market was fairly decent today. And this week, since we do not have that many macro catalysts or that many large earnings, could just be a week of smooth sailing for the markets and largely based off of technical price action. Been a while since we've gotten a week where we didn't have massive volatility events in terms of news catalysts. So in today's video, guys, we're going to recap a few things together. Number one, we're going to go through our technical analysis rundown of our major market indexes, check on the rotation, see how the markets are standing up. Number two, we're going to go through some of our big tech name lists, see which big tech names are still at decent levels to possibly fire off some trades. And if you watched my top 5 options video yesterday, there was actually quite a few of those plays that came alive today. So if you were paying attention early on in the markets, maybe you were able to snipe some very good deals. And thereafter, guys, we're going to take a look at some of the high-flying names that happened today. Several names that have been fairly muted here over the last few weeks, months, are finally starting to come alive. So we're going to recap some of the day's biggest losers and the biggest winners as well, and give my impressions on whether or not there could be some trades in those names as well. And lastly, take a brief look into my portfolio for a few of the trades made today, but also which positions I am holding into the rest of the week. So it should be a fairly interesting and fun video, guys. Let us jump right into it, shall we? So in terms of the SPY, up to 0.29%, the Qs up 0.23%. All across the board, though, we had some very nice rotation, led to the upside by semiconductors. Semiconductors are really coming back in a big way. One name after the other, we're starting to finally see some rallies across the sector. Not only NVIDIA, TSM, and Broadcom, but really some broad market performance today. And we'll go over a few more of those names when we take a look at the biggest winners of the day. Intel with a 16% day, but overall today in the market, guys, decent rotation. Sure, we had some big tech names that were kind of left behind in the names of Amazon, Tesla, Google, and Meta. Microsoft, NVIDIA kind of carrying the torch for that. Financials had some very beautiful rotation today to the upside. Healthcare still remains very decent. There was a beautiful entry possibility on UNH today for some short puts if you had a large account. And the bottom half of the market, guys, even though yields were slightly higher today, the interest rate sensitive sectors did perform quite well, which goes to reinforce what I say on the channel sometimes, guys. Correlation is not always perfect, right? Even though yields can move up some days, the interest rate sensitive sectors can also go up. So it's not a perfect correlation. And today was a perfect example of that as well. Take a look at the one-day relative performance here. You'll see that most of all the sectors of the market were green, very broad market rotation. Nice to see that. The only ones to the downside, communication services, which for the most part is entirely Google and Meta, and they were down. And thereafter, guys, consumer cyclicals as well, getting a little bit hit to the downside today, but overall beautiful week. Or beautiful day rather, on the 1 week relative, you'll see that, well, after 4, 5, 6 days of rally in a row on the SPY and the Qs, we are sitting fairly well in the midpoint of the month of February. All market sectors pretty much in the green. The only one lagging a little bit behind is healthcare, which leaves us on a 1 month since January. Since the volatile events of the month of January, where do we stand in terms of market health, market breadth, and market rotation? Well, you can see that most of everything is finally starting to outperform to the upside. Only energy really getting left behind. So all in all, if I were to paint a picture of the market, I would say the market is a lot more broad than we were seeing late December and even throughout the month of January. Nice to finally see a lot of the sectors that were somewhat left behind starting to participate, namely healthcare and semiconductors, which are a very big weight. They've really started to come alive in the last 2, 3, 4 weeks. So that is something we definitely like to see. Now, in terms of the technical analysis, guys, let's do a rundown of our market indexes and see where we stand per that rotation, right? Where do the bulls stand? Where do the bears stand? So in terms of the S&P 500, guys, well, fairly obvious, right? Beautiful daily uptrend breaking out towards new all-time highs. Still have not truly cleared this to suffice or confidently say, rather, that we're really breaching the levels, right? That's the normal SPY. If we take a look at the futures chart, though, it paints a more clear picture. We know we had this massive bull flag that I was talking about last week, breakout to the upside, now above the moving averages. So if we come back to the SPY here, pretty much the analysis stays the same, guys. Just watch the price action and the structure. Higher lows are set. Higher highs are set. If we get a pullback from here, just looking for a daily higher low for possible further trend continuation to the upside. The bulls creating some nice space. Anything above 598.57 is going to be a new daily higher low for that trend continuation to the upside. And also below us at that higher low level, we have a very decent area of support, which is 600 down to about 595. Have not really moved this area in about 2 months at this point. We are clearly above the moving averages as well. Just pay special attention though. The weekly is looking very good, guys. We are on the verge of setting a new weekly uptrend. After losing the weekly uptrend here at the midpoint of December, it was a downtrend. It takes a long time for the bulls to reset the price action structure. They're doing a great job of that. If this week ends any higher than this, that will be a confirmed new weekly uptrend for the bulls, and everything is not looking too bad for the S&P 500. I do not see any major red flags. Continuation could be highly likely to the upside. Moving on to the Qs as well. The Qs not performing too poorly today either. They were down a little bit early on in the morning, but were able to recover in the last hour of trade. Daily uptrend is obviously set as well, and any move lower will be looking for a higher low. Anything above 522, looking for that higher low for possible further trend continuation. And this is one of my favorite patterns of all time. It is the breakout of a big level of resistance, retest of that resistance possibly, and then the run. That is the breakout retest or the trend continuation trade. Back down here for a touch, 532 down to about 526 with the 12 and the 26 EMA. This pattern would not look so awkward if it gets filled and would actually point to the fact that the bulls are very healthy, respecting the price action structure and looking to move a little bit higher. The Qs have advanced against the S&P. The Qs are now officially in a brand new weekly uptrend, something we have not had since this period in time back here before Jerome Powell kind of crushed us, right? Weekly downtrend, now reversing into new price action structure. Beautiful weekly uptrend by the bulls. I see no red flags at all. Do we have some big tech names that are lagging behind others? Yes, and we're going to get into that when we look at the big tech name list in just a few short minutes. Moving on to the XLF financials here. Financials continue to be one of the lead bulls as well, guys. Beautiful, beautiful price action here. Daily uptrend is set in stone pretty much. Not yet eclipsing brand new all-time highs, but very close. I'll remind you, since we are now still in a daily uptrend, any move lower, consolidation at this point, looking for a higher low. Anything above 51, going to be looking for a new higher low. If we cannot break it right away like this, well, if we have to accumulate sideways a little bit, it's perfectly fine. I would not say there's any red flags. Now, in the event we break the higher low here, $51, and head to the downside for some daily downtrend or daily consolidation factors, well, keep in mind, what are we looking for here? On the weekly time frame, we will just be looking for a weekly higher low for a brand new weekly uptrend reset by the bulls. They had a weekly downtrend going over here. Now we've engulfed. Now we're looking for a weekly higher low for further trend continuation. So any downside price action on the daily timeframes on the XLF, just make sure when in doubt, zoom out, guys. Take a look at your weekly. The weekly bulls are in absolute full control domination mode. Whether you look at the credit card companies like Visa, or if you look at the credit, or if you look at MasterCard, if you look at American Express, or you look at some of the banking names as well, such as JP Morgan, Bank of America, and even some of the names like Goldman Sachs, the investment banks, right? They are just really churning higher, grinding higher, looking like a very healthy financials market overall. Moving on to XLV Healthcare, as a matter of fact now. So healthcare, one of the sectors that is now broken trend to the downside. Daily downtrend getting rejected here into resistance 148 down to about 146. Not the biggest deal in the world. We were saying that last week, if we did flush through this level with a daily downtrend, when in doubt, guys, zoom out. It'll give you a much better picture. The context of which is a sweeping daily downtrend for the last 4 months. The bulls putting in now a 100% engulfing move. We are just looking for a weekly higher low to possibly reset into a weekly uptrend. A weekly uptrend we have not had in the last 5 months worth of time. So that is what the bulls are trying to do by large and by far, looking for a higher low. Anything above 136.50, looking for that higher low. And the bulls benefiting right now from absolute ton amount of space to possibly make a second attempt at smashing through this resistance area. Few key names that we're looking out for here is going to be UNH. UNH, I think, is a very, that's not UNH, UNH looking like a very decent setup, guys, coming back down into our support range, which is pretty much 490 down to about 450. If we clip into here, could be a very decent opportunity for some longs. We are getting very close. A few of our members went with short puts in this area as well to possibly pick up some shares and ride those shares higher, guys. This is literally 2 years at this point worth of support. The 200 weekly EMA is this green line right here. I think this is looking like a very beautiful trade in the context of how often UNH clips into this 200 weekly. I mean, you can go back over the last 15 years. You can see how many times they clip into it, and the times that they do usually does represent a very decent buying opportunity. Fundamentals of the business have not changed. It's still a fantastic company. Just healthcare price action has been to the downside in the last 2 weeks. That is probably my favorite play in healthcare right now. Moving on to semis. So semis coming alive a little bit, but still not through resistance. 260 down to 248 is the zone of resistance, not yet filling the gap from the DeepSeek event, right? So what we're looking at right now is a very beautiful daily uptrend into resistance. However, if we get rejected, the bulls have a little bit of space, anything above 245, looking for a new daily higher low. So if they cannot smash through in one clean shot, we're going to be looking for the two-step smash through process of this resistance high. NVIDIA earnings is going to be the biggest catalyst for this index, and those earnings are next week, of course. So semiconductors, although the daily price action looks good, the weekly still looks exactly the same as it has the last 3-4 months. We are still trapped between two ranges, overhead resistance, which we're in right now, which ends at 260, and below support 230 down to about 220. One thing's for sure, if for ever which reason we undo this entire move again, I'll be looking once again to write short puts on my favorite company on any weakness in this entire index. My favorite plays still remain NVIDIA, TSM, Broadcom on some pullbacks, with a special shout out to Micron and AMD. Moving on to IWM Russell. So the Russell having a nice day today, 0.55%. But if I keep it on this weekly chart, even though I'll go back to the weekly, yeah? But even though we had some nice price action today, we are getting still rejected at resistance, which is 230 down to about 225. So keep that in mind. The weekly uptrend is not as clear cut as some of the other sectors right here. Need that expansion to get the full risk on into the markets, into the Russell as well. And so far, we are not getting it. So in the event that the bulls are not able to claim this level with a new daily uptrend and break above, and we get sent a bit lower, flushing the lows right here, I wouldn't say it's too big of a deal. We're coming into very big support below us, 217 roughly down to about 208. If we do come down there, I will be interested in making a trade, but I'm not going to take some longs into resistance. For me, there are two different trades at play here. One is the confirmation breakout, retest as support, and run. This retest entry from as support is a very high probability trade. We are waiting for confirmation that the bulls want to claim the level. If not, the second trade is just a pullback into support, and I will possibly be playing this one into our support range down here, which is roughly 215, 210. Would not mind positioning either way, but right now, right into resistance, right? I'm not in the business of buying things into resistance. I need to wait for the confirmation break to enter a long on the breakout retest confirmation trade for the long, or I'll be waiting patiently to buy the dips down here into the support range. So although the price action on IWM was decent today, it was a green day, still not breaking any major levels. And lastly, the Dow Jones. The Dow Jones as well, 0.02% to the upside. This one kind of looks like financials, right? Had a beautiful rally and now it's kind of getting stuck at the highs without breaking new all-time highs. I would not say there's any major red flags on this price action though. We are just in an overall tightening range. Huge move up by the bulls. This is a bull flag. It's a tightening range at the top end of a move. That is what you like to see. It shows that the bulls are very strong. They're not giving back too much ground at all. They're really holding the levels. So it's looking extremely good for some possible continuation after they are done their tightening up accumulation range, possibly going to get the break to the upside, especially if the rest of the market continues being relatively broad. So the Dow Jones not looking too bad, just daily sideways consolidation, bull flag in my humble opinion. Weekly as well, guys. When in doubt, zoom out, right? Weekly downtrend, sweeping engulfing move by the bulls. If we're looking for a bit of downside, we are just looking for weekly higher lows for a possible new reset to the bulls of a weekly uptrend. No red flags on the Dow Jones either. The index is actually looking quite decent. So that is it for your major index recap. Let's go over some yields real quickly. The yields have not really moved, at least in the most recent few days. What we are looking for here, so the price action short term is a little bit messy, right? 10-year and 20-year look the same. Daily downtrend, engulfing move by the bulls. Can they get the higher high break, which would mean bonds would be going lower? Or is this just a false attempt at a daily uptrend and the breakdown lower? The daily uptrend is not so clear, is it? focus on the weekly time frames here, guys. The weekly bulls are still in control of these yields. What you need to see right now is a lower high into lower low, right? Similar to what we got right here. It takes a long time to reverse weeklies into downtrends. That is the move we're looking for on the 10 and 20-year yield. So I would not say we are out of the woods just yet and that yields are going to start their big move to the downside. We are still in a weekly uptrend. The bulls, which means the bond shorts are still well in control of this trade, need the confirmation of the weekly downtrend. When you get the confirmation of the weekly downtrend, the monthly highs are set. And now we're looking to attack levels to the downside on those longer form yields. So keep your eyes peeled. As of right now, the bond trade, in my opinion, something like a TLT is a decent entry. But as I always say, guys, you have to be very patient. And if you're going for call options, I would be going minimum June of 2026 at this time. It is not Palantir. It does not move as aggressively as you guys might think. You can get stuck at a level here for 3 months and just not move. And if you have not enough time on those call options, they will definitely bleed out and you will just not be happy. But if we're going for a share trade, there's no time on those shares, of course, right? Looking for the weekly breakout of the weekly uptrend, which would be synonymous with the yields getting their weekly downtrend in motion. So keep that in mind, guys. I am still a fan of building positions on bonds if you like bonds at these lower levels, but just factor in that you may have to wait a little bit longer than anticipate to truly get the lift that you're looking for on some of those trades, right? Sorry, I pulled up the wrong chart, just checking that we're recording. All right, beautiful. So now that's it for yields. Now, if we dive into Bitcoin at this point, well, I mean, if you ask me my opinion on crypto, guys, if you guys are familiar with crypto Twitter and the timeline, as they say, right? The timeline is in absolute shambles right now. Everybody is saying it's over. Altcoins are never going to have a rally. Ethereum is done. Solana is done. Everything apparently is just going straight to zero and see you guys in 4 years. And all of that with Bitcoin still maintaining relative highs. The reason that people are saying that, guys, is because they're forgetting the one clear element that I always describe on the channel, which is Bitcoin dominance. This is the chart that you guys should be watching for the altcoin rally. As long as Bitcoin dominance is still in a weekly uptrend, Bitcoin is going to be the favored trade. The big money is not yet rotating into the lower altcoins, Ethereum, and anything under that. It is still the entire Bitcoin show. If you guys want to see an altcoin rally, one thing has to happen. Number one, Bitcoin, the lead market bull of crypto right now, has to put in a new weekly uptrend, has to start attacking the 110, 120 level. Only then will you get some renewed confidence in the sector, some renewed bullishness, some renewed bullish bets, and then that trickle down. When people make some good money off of this breakout here, that is when the money will start to trickle down. Crypto sentiment will start improving and people will stop panicking as if Bitcoin was $20,000 right now. That being said, beautiful support below us, 91,000 down to about 88. Nothing bad to say about this chart overall. I do not see any red flags. It's just Bitcoin has been flat now for 3 weeks and people are getting a little bit impatient, which is perfect for us. When we see some downside momentum into the lows, we can write put options. I like to use BITX. Some people like to use MSTR. I love to write put options down here, guys, on BITX. Lower 40s down to high 30s as well, which would be synonymous with about 80,000, 75,000 Bitcoin. I'm not saying it's going down there. I'm just saying when you get a spike down here with a big move with some volatility, it frees up these levels. Whether it goes down there or not, I don't care. I will collect my premium anyways on those contracts. And if it does go there, perfect. I want to buy it down there anyways. But as of right now, we are still looking fairly decent. No new net lows in terms of closes for the daily downtrend, but we are just stuck, guys, stuck between two levels, just like semiconductors, right? 101 to 98 is above resistance, and below us pretty much is your 91,000 down to about 88. Still trapped between two levels. Need to see a new daily uptrend shift, break resistance, use it as support, and go for the run. Kind of exactly like what they attempted here, but just did not get it. It came undone, right? So pay special attention to that. Just range bound on Bitcoin, and I don't even need to look at any charts under that. They will not move. Ethereum won't move. Solana won't move. Nothing will move, guys, until Bitcoin gets that break. And you'll notice that Ethereum's doing a good job of holding up here, but still under the resistance level, which is 2960 down about 2781. You look on the weekly chart, you'll see that even better, right? Decent area of resistance. It is a weekly downtrend at this current time. The bulls are not in control of this higher time frame, so you need to see two things happen. The daily uptrend needs to get back, then you need a big move on the weekly, reset the weekly uptrend, and then we can start talking about 35,000-4,000. But right now, still just a decent area to accumulate some Ethereum if you are still bullish on this network overall. Moving on to our big tech names now, shall we? Give me a quick second, just going to check the time. All right, so moving on to Apple. Apple down about 0.05%, but largely just flat on the day, right? Nothing bad to see here at all. Daily uptrend is clear as day right now. And in the event we pull back right now, because the bulls are getting a little bit extended, 4-hour RSI is slightly, ever so slightly overbought. It's not Palantir. Sometimes it doesn't last overbought for that long. And hourly is coming off overbought conditions as well. Now, that being said, guys, if we do get a pullback on the daily, this is once again one of my favorite trades. So I'll move this box into a green box now because we're through it. Let me just change it to green. So this is going to be your new support zone essentially, which is, give me a quick second, working with one hand, have the microphone in one hand and got the other hand on the charts, right? So this whole area, guys, is pretty much your 237 down to about 230. If we can retest this entry, this is a decent area for some Apple longs if you like Apple. Not my favorite stock to be trading swing trades on because the valuation right now of Apple still remains slightly, and when I say slightly, I mean a lot actually, decently elevated, right? At about 3.17 in terms of the PEG ratio. They're not growing that much, but Apple is Apple at the end of the day. Are they cheating using buybacks to prop up the stock? Yes, but I mean, it's part of the game, right? A lot of companies do that as well. Just when you look at the buyback kings, just look at AutoZone, right? A lot of this chart is just pure buybacks. So, I mean, it is what it is, right? Are they growing? Is Apple growing revenue a phenomenal amount every single year? No, but are they still Apple? Are they still growing their services business well? Are they still performing well in a few other key metrics of their business that we covered during earnings, such as the new Mac sales, the laptop sales, the wearable sales, and everything like that? Yes, but the iPhone, the flagship product, guys, they're just not getting enough juice on it, which is why you have to be a little bit cautious when moving into Apple right now. Call debit spreads, probably the best bet if you're looking for some continuation, because if you wait for the retest here, very easy, guys. The stop loss goes below here, and your take profit is the all-time highs. And in terms of risk to reward, that's actually not a bad trade overall. If you were to take this one here, and we would extend this, right? So there's your stop loss, right? And here's your take profit. The risk to reward profile is about a 2.5 to 1. So it is a very decent trade for a little bit of a swing on Apple. But all things considered, the bulls are sitting quite good right now in terms of price action structure. Nice to see them hold above that support. So we'll see what happens. Apple still remains a very strong name, one that is not leading, not lagging, just kind of in between, right? Now, moving on to AMD. AMD having a nice little 1% day. I mean, nothing special for AMD. We know this one's been a problem child for the semiconductor niche. Now, the valuation, though, is very attractive, guys. Even at 114, the PEG ratio is extremely cheap. I'll remind you of the thesis of the company. They're not going to beat NVIDIA. They're just trying to get second place, trying to corner about, 5 to 10% of market share for data center GPU applications. The EPS is going under a beautiful expansion this year. The revenue is going under a beautiful expansion as well. The best year AMD will ever have is this year. And then the best year they will have should probably be 2026. So we're looking for expansion of fundamentals, expansion of gross and net margins as well, and expansion of free cash flows. Their earnings were decent, guys. I mean, the market didn't receive them too well, but we covered them on the channel. And they really were not that bad, right? Look at the data center sales and everything right there. Everything's improving. However, the price action, right? The price action, everything is still in a downtrend. The monthly is in a downtrend. The weekly is in a clear context weekly downtrend as well. And the daily as well. The daily still not resetting the daily uptrend. We have a very nice bounce out of our support range down here, which is largely, let me just zoom out for you guys. Support range here, 112 down to about $100. That is your very large support area. And if we were to look on the daily, you'll see that although the bounce is nice, you need to get the daily uptrend back. Only if you get the daily uptrend back will we be able to confidently say, okay, now we're looking for a weekly engulfing move and reset into a weekly uptrend as well. So far, that has not happened. So first step is first, need to get that daily uptrend. I will be still a very big fan on any pullback here because we have a decent amount of space here. Any pullback looking for a higher low, to try and go for the daily trend change. If we get the pullbacks like this, I am a decent fan still of writing puts under the market, lower 100s. If it's a name that you want to participate in for a swing trade, even something like a call debit spread, or if you guys want to be so ambitious as to throw a leap option contract at this one, something like a 70-80 delta, something like that, January 2027, to really give it the time to recover, brand sentiment recover, and give time for the fundamentals to expand, I really don't think it's that bad of a trade. The risk to reward profile is actually favorable, but notice I say risk to reward profile. It is not a stock that has no risk, but the reward could still be quite attractive in my humble opinion, which is why I remain confident in playing it to the upside for now. Now, moving into Amazon. So Amazon had a bit of a drop here early on in the morning, but recovered decently intraday. Amazon was actually down over almost 2.25% at one point today before recovering. So they did a nice job of bouncing into our support range here, 230 down to about 225. The expected move for the week, as I covered on the top 5 options play, was about 224, came right into it, and then the Uno reverse card. So now we're tapping into the 50 EMA, which is this red line right there. And the structure, although the daily is clearly a daily downtrend, just when in doubt, guys, zoom out. What are the bulls looking to do here? Well, who's in control? We are in a beautiful weekly uptrend overall, looking for a higher low at this point on the weekly. Anything above 215, just looking for that weekly higher low, tapping as well into the 12 EMA. This is our confluence zone, right? Horizontal support, 12 EMA on the weekly. Amazon's respected this 12 EMA for the last 6-7 months in a row at this point. Could just be looking for a slow and steady bottoming out process before going for a new leg higher. Nothing is fundamentally changed with Amazon. They're still as good of a business as they were on Friday, as they were last week, as they were a month ago, as they were 2 months ago. Their earnings were fantastic in my opinion. Very solid AWS growth. And most net income ever, most free cash flow ever was over the course of last year as well. So guys, Amazon is just a powerhouse of a company now, expanding everything. The e-commerce business is doing fantastic. Their AWS business is doing fantastic. Amazon Prime Video is doing well. Their advertising business is doing well as well. I see no problems with this company whatsoever. And at a 1.8 peg, sure, the valuation is not the best, but is it crazy high? No, absolutely not. I still do believe Amazon can have some decent upside this year. 250, 260 is my yearly price target on this one. And when you even look at the monthly charts, guys, what are we looking to do here, right? Just looking for possibly some monthly higher lows for further trend continuation. So the way I'm playing this is any pullbacks lower than here, guys, 220, 215, 210 is the sweet spot to build more longs on this very beautiful stock. Moving into Google right now. Google as well was down approximately over 1.5% early on in the morning, freeing up the exact same top 5 options opportunity I was talking about yesterday. Came right down into the expected move. Short puts around the 180 level were available for a decent portion of the day. And even if you were using these leverage plays that I was talking to you guys about, GGLL, I mean, some of our members got some really good premium down here, 40s and whatnot. Even the 39s were briefly open for the week. Very, very easy play on Google, guys. This is still one of my favorite bets in the entire market right now. Number one, because of the valuation. The valuation is just really, really cheap as a big tech name, right? 1.4 peg, can't go wrong with that. So even though daily structure has been lost a little bit here, we do have a clear daily downtrend for the bears. We're coming into the next line of defense, which is my actual desired level. Lower 180s, I've been saying this for weeks. Lower 180s, 175, I will buy all day. The 200-day EMA is down here at about 175. So positioning in or around this location is a very decent buying opportunity. In my opinion, for Google on the weekly, this is true. We have lost the weekly uptrend structure, putting in some lower lows. That is weekly consolidation. It is not a weekly downtrend. That would be lower high into lower low. We do not have that. This is one clean sweep weekly consolidation after earnings. And when in doubt, zoom out, guys. What are the bulls looking to do on the monthly here? Well, we have a confirmed beautiful weekly uptrend for the last 2, almost 3 years at this point, looking for a monthly higher low for further continuation. And lo and behold, what is down here as well? The monthly 12 EMA confluence support 180 to 175, confluence with the 12 EMA. And you guys tell me, how many times has Google respected this 12 EMA on the monthly in the last 2 years since the bull market started? Well, if you answered every single time, you would be correct. So that's why I'm a big fan of playing Google in this lower location. Technicals and fundamentals look outstanding. Moving on to Meta right now. So Meta down about 2.76. They were down over 3% at one point today. but it's not surprising, right? Look, this is one clear move to the upside. Everything comes to an end at one point, guys. Daily conditions on the RSI were overbought, and I was telling you guys, be careful for some longs up here, right? Not the best value proposition to be FOMOing at the all-time highs because you didn't want a position here, and now you keep watching it. Now you pull the trigger, and now it starts weekly consolidation, right? Do not do it. Don't get trapped. So in the event, Meta is working with a ton of space right now at this point. Anything above 610, just looking for a daily higher low for possible further trend continuation. But if the bears pull back too deep and set up the daily downtrend, and the MACD crosses and you lose some of that momentum and the money rotates in some of the lagging names like Amazon, like Google, like Microsoft, right? Do not be surprised. Meta will just be looking for a weekly higher low for possible further trend continuation. And where could we head down if we actually start breaking down? Probably the 12 EMA, which is right now about 660, right? Meta's done a great job of holding that 12 EMA for the last, well, a very long time, let's just say, since the month of August. I would not be surprised if we are just looking for a weekly higher low for possible further trend continuation. But right now, a little bit extended, right? Do I see any problem in holding long-term shares? No, I have long-term shares in my portfolio and I'm not selling. But just swing trades up here, guys, not best practice, right? I hope you can understand, just not best practice at all. Moving on to Microsoft right now, another name that's been lagging. So the names that are lagging, guys, Amazon, Google, Microsoft, they have been lagging behind. Which names have been outperforming? You can argue Apple. You can argue as well that Meta, well, not argue, Meta has clearly been outperforming. Netflix as well has been truly outperforming. Now, if those names start consolidation, there might be some rotation into the names that have been left behind. So I am playing the names that have been lagging. This one as well was a name that I gave in the top 5 options list yesterday. The premiums were available in or around the expected move all morning and most of the afternoon as well. Keep that in mind, not only on Microsoft, but also on MSFU, which is a 2x leverage version of Microsoft. Premiums were available all day, guys, at the strikes I was telling you guys in the top 5 options video. So Microsoft, the chart has not changed. Nothing has changed. Still a daily downtrend right now, looking for the bulls to find a base of support. Good enough. Good enough right now because we're in this area of weekly support as well. Take a look here, right? 405 down to 390. This area has been here for the last year and a quarter almost on Microsoft. So I'm a big fan of buying here, and then we ride the take profit. This is take profit number 1, and then you ride take profit number 2 to the all-time highs pretty much. So I'm a big fan of building some Microsoft swing trades in this position. Fantastic company, improving fundamentals, nothing wrong with the business, but this is just market rotation, guys, right? Classic market rotation. This name is lagging right now, but sometimes when Microsoft wants to, it can plow through those gains for the next 2-3 weeks, and we'll have a beautiful leg to the upside. Resistance, though, is going to be 425 to about 435. Need to see a daily uptrend reset and start attacking the resistance range, but still one of my favorite companies in the entire market right now to build for either a long-term portfolio or some decent swing trades with a bit of time on those contracts, talking like 3, 4, 5 months type of thing, right? Not the weeklies. Moving on to Netflix. So Netflix as well, similar to Meta, right? Pulling back. Why? Well, the bulls are very extended right now. Daily uptrend is beautiful, of course, but daily is overbought condition. So looking for a higher low, anything above 999. Let's call it 1,000, shall we? Anything above 1,000, looking for a higher low for possible further trend continuation. But I'm not going to lie, we are extended. And when you look on the weekly time frame, you'll see how extended we are. Extended from the 12 EMA. So even though it's a beautiful weekly uptrend, Netflix sometimes after these monstrous rallies pulls back to the 12 EMA before putting in a new leg above. So if the bulls give back these gains and start rolling over, is it over for Netflix? Is the fundamentals of the business changing? No. Normal price action. Look for the weekly higher lows for possible further trend continuation. Their earnings were fantastic. So at this point, anything above 824, looking for that weekly higher low for possible upside continuation on Netflix. Moving on to NVIDIA at this point. Well, NVIDIA also not having the worst day at all, right? 0.4% to the upside. They've been putting on a heck of a show in the last roughly 2.5 weeks worth of time, finally filling the deep seek gap today. So the bulls looking very good. And now we have reclaimed this level. I'm not willing because it's, well, actually, you know what? I will change this one because they closed the weekly above it. I thought that they were marginally above it, but they are decently above it. So now we are back above this level that used to be resistance, smashed through it. Now we get the famous trade again, right? The good old breakout of the range, retest as support. And you can see how many times the bulls had used this as support since October, November, and December before DeepSeek event, right? So moving on further, anything at this point above 129, looking for a daily higher low right into support for possibly another leg of expansion. That is if the bulls don't just go for it right away, right? Obviously, the all-time high is going to be your area of resistance, and that currently stays put around 148, 150, let's call it. So the bull's not looking too bad at all, guys, on NVIDIA. I'm a big fan of buying any and all dips. Matter of fact, I'll show you guys, I actually did a position, swing trade position for earnings, but any pullbacks could be a decent little position for a swing trade, good old trend continuation setup. And if you pull back a bit more, I'd be a big fan of writing some short puts in the lower 120 range around the 200 daily moving average around this lower area of support, which is 120 down to about 115. But NVIDIA, can't say nothing bad, guys. Looking strong, and they have their earnings next week. This is a full, almost full weekly engulfing move. Bulls creating a lot of space to maybe get that weekly trend change going. And after earnings, if they smash it, they should be able to break those all-time highs. And I would not be surprised if NVIDIA has good earnings, guys. All of big tech, most of big tech that are building data centers went down after their earnings. Why? Because they said they'd be spending more money on CapEx than Wall Street had anticipated. What does that mean on the flip side? That means that NVIDIA is going to be getting more orders than they had anticipated as well. So NVIDIA should be raising guidance for the rest of the year versus Wall Street expectations, right? Moving on to Tesla right now. So Tesla remains somewhat problematic right now. We've lost a few key levels. Daily downtrend is clearly in motion, looking for maybe a lower high, and then it's up to the bulls to prove to us, can we get this back? As of right now, the size of the bounce is okay, but nothing to really scream home about. Put the fibs on this, only a 38% bounce. If we roll over from here, guys, it favors a retest of the lows or maybe even lower, because the bounce size is not good enough to say, okay, the bulls create a lot of space. Maybe we can now attack and get this resistance range back and go for the daily trend change. The bounce, objectively speaking, is still fairly weak. And above us right now is a level that I will also gladly change colors. This is now big resistance. The bulls used it for a while as support, trying to establish support. Now it is resistance. So Tesla remains daily downtrend. At this point as well, remains weekly downtrend. And I'll remind you, even on the weekly, guys, if you get a nice daily break up structure right here, what are we looking for into resistance, guys? That's the weekly bears, looking for a weekly lower high into resistance or possible a retest of the lows. Now, Tesla, I'm a decent fan of playing Tesla, but not here. I want lower. If I'm going to play Tesla, I'm going to be playing it very greedy, guys. 310 down to about 390, which is exactly where I want this one. It comes into an arguably more solid area of support because right now, guys, there's really not much. There's these little guys right here, but it's not that good of a level. I would much rather play Tesla short puts down here, 310 down to 390. I'm not saying it's going to go down there. I'm just saying if it does come down a little bit lower, I probably will be firing off some Tesla trades in this area. But overall right now, who is in control? It is your daily and weekly bears. So when in doubt, zoom out. What is happening on this chart? We are looking on Tesla for a monthly, right? Higher low for possible further trend continuation. When you get too far from the 12 EMA on the monthly, remember this always, guys. You get too far from the 12 on the monthly, you're going to pull back into it and normalize. You get too far from the 12, pull back right into it here, and you're going to normalize. Pull back too far from it, pull back and normalize. What we're seeing right now, the exact same concept. The bulls are trying to set up the monthly, longer time frame higher lows, get some support, get more momentum, and then we might be due for some trend continuation. But Tesla right now, play it slowly, in my humble opinion. Daily downtrend, weekly downtrend is no joke, guys. So don't be in any rush to just throw the entire stack at it right now. Build slowly upon the drops right into this area, which is a much more solid area, in my opinion. Moving on to Palantir, the stock that just never stops. Palantir up another 4.5% today, 125 almost. The next target for Palantir, arguably psychological, guys, 150. At this point, we are well beyond overvalued. We are like overvalued right now. But sometimes, guys, when there's enough hype and momentum behind a stock and people just clear the order books to the upside, keep loading up on the call options, it just creates the actual squeeze like you're seeing right now on Palantir. But this one has long since decoupled from its fundamentals. It is pure momentum right now. And I'm saying that, guys, as a Palantir shareholder with a cost basis of $12. If I'm telling you it's expensive, trust me, it is expensive right now. That being said, the bulls are in absolute full domination control mode right now, looking for the higher lows, are set, looking for the higher high trend continuation. If we get a pullback right at this point, anything, suffice to say, anything above 109.50 looking for a daily higher low, and yes, for possible more trend continuation. I know the valuation is high, the daily time frame is overbought on the RSI. Maybe my head's in the way. Daily RSI is overbought. This is true. Weekly RSI is overbought. This is true. Monthly RSI is overbought. This is true. Would I be starting a position up here? I think you guys know the answer, right? Absolutely not. But this is a good opportunity to maybe be writing some covered calls. If you have some shares or you have multiple call options, guys, do not get overly greedy. I know it looks fantastic. I know you just think it's going to go to the moon. Palantir is going to go to $1 million per share. Don't get greedy, guys. If you have massive profits, lock it in one way or another. If you have 5 contracts on the call side, maybe you close 3 of them, you close 2 of them, and you leave a couple runners. But lock in those gains, please, 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 guys. Everything is telling you this one's overvalued. All the technicals are telling you it's overvalued. The fundamentals are telling you it's overvalued. So don't get FOMO. Don't get greedy. Take the profits when you can. And I'm telling you this as a Palantir shareholder. I have closed now over half of my position on this stock. Extremely happy with the gains, guys. 5, 6, 7, 8, 9, 10x, guys. You don't make that often. When you see it, take the gains. We will largely have some time on Palantir eventually. Eventually, guys, it will consolidate for an extended period of time, similar to what it did over here. And then we can then review it to see if we can build further positions. But now this is kind of getting a little bit peaking out right now, in my humble opinion. So do with that what you will, right? Moving on to SOFI right now. SOFI up a cool 3.82%, building on their lead they had on the Friday session of 6.71. Not looking too bad. It was a daily downtrend in motion. Nice sweeping engulfing move from the bulls. This is what you want to see on AMD, but it's just not happening, right? Beautiful engulfing move by the bulls, looking to reset into a higher low on any pullback, anything pretty much above 1444, looking for the higher low pullback for the possible new daily uptrend. The bulls reacting very nicely from this support zone down here, which is 16 to 14. What are they looking for on the weekly? Weekly higher lows are set. Can we get the weekly trend expansion into $18, $20? That we will see, but they did react beautifully from the support zone, which was established back here in 2021. I'm still a very big fan, as I said on the top 5 options play, very big fan of playing SOFI, $15, $14 if we come back down there. I have some call options, I have some shares, I have some short puts as well for more shares below the market. So we'll see what happens, but right now looking pretty good on SOFI, not really clearing any major levels, but we are trying to get the daily in motion and trying to get that weekly uptrend momentum back for the bulls, and the monthly time frame as well is not looking too bad at all. This was just sideways monthly consolidation into support, looking for the monthly uptrend continuation. So SOFI is not looking too bad at all things considered. So all that out of the way, that is our rundown for the day. Hope you guys enjoyed that. Now let's look at some high flyers, shall we? All right, so if we take a look at the options list here, there are a few names that stand out, right? SMCI is just powering on. And I was saying all the way down here, guys, that this one had very decent risk to reward. Notice again how I say risk to reward. There is never no risk, but there is always some possible reward. So SMCI up an absolute ton, up a 2x pretty much in the last 3 weeks of time. This one is kind of gone at this point. I would be willing to play any dips on a pullback for continuation, but buying up here, guys, after the big rally, can it work sometimes? Sure, but does it most often fail? Yes, absolutely. Do not get the FOMO, guys. Wait for the structure, setting up a beautiful new weekly engulfing move, eventually going to look for the higher lows for a new weekly uptrend. Any pullbacks into the maybe 40 zone would be decent play for a swing trade. Intel as well. Intel just coming up. Finally, Intel's coming up. You guys have known that I've had some leap call contracts on this one for a while, as a matter of fact, since all the way back here. I have the $30 calls for January of 2027. I have some time for this recovery play. Is Intel out of the woods? No, they have nothing, right? The monthly is still a downtrend, need to reset, but is it a good start to Intel? Yes. Buying up here, guys, into big resistance. Not the biggest fan. The play was buying it down here. So now when I get questions and people saying, can I buy Intel now? Well, where were you guys back here? Why didn't you want to buy it back here, right? Now into resistance, not the biggest fan, same as SMCI. Wait for the higher lows for possible trend continuation, but if you want a DCA, can you buy some here and take your chances? Sure, but leave room to DCA in the event you get a pullback and put a lot of time on these contracts, guys. Intel is Intel at the end of the day. You know their business is struggling. It is a heck of a turnaround story. It's not going to happen snap of a finger overnight. So I'm still thinking that this one can hit in the $30s to $40 range, maybe by the end of the year, but not in the next 2 weeks. So keep that in mind, right? Micron as well, coming back alive now. They're just kind of trapped between two levels, right? Trapped kind of like NVIDIA. 107 to 100 is resistance, trying to break through it. I'm a big fan if Micron pulls back again, writing some short puts down here. You know, mid to high 80s, not the worst proposition for Micron. Looking good, but still no confirmed weekly breakout. Nike is one as well. I was saying the last few weeks, I think Nike is ready down there, and a few of the members as well. I was pricing out some call options for them. A lot of people took some leap call contracts back here, and they are now up nicely on Nike. Nike is still, even if it's rallied, in a very attractive zone, guys. Monthly 200 EMA and huge support. Even though it's rallied a lot today in the last few days, in the grand scheme of things, has it really moved? Not at all. Nike's still probably one of my favorite recovery stories out there in terms of a legacy stock, right, that had an execution problem. They recognized the execution problem. They've now put forth steps to come back as a company. They've swapped CEOs. The new management team has a good head on their shoulders overall, and their business plan that they've been putting forth the last quarter when we went through their earnings was very attractive, getting back to the basics, innovation for their shoes, working more closely with athletes and sports, sports networks and just sports associations overall, rather than focusing on the fashion and style portion of their brand, right? They're getting back to basics, back to running shoes, back to high performance sports shoes overall. I like this one. Decent recovery play. So even positioning here, guys, sure, you can wait for a pullback, but even positioning here, not the worst in objectively speaking for either shares or call options, but Nike is not Palantir, guys. You're going for call options, June 2026 for those leaps minimum, guys. Don't short yourself out on too little time. Another one that's performed well today is NVO. NVO with the gap up open 6% today. The valuation on this one, guys, is crushed, absolutely crushed right now. It is extremely attractive in my humble opinion, below the 200 weekly moving average. You go back in NVO's history, you would have to go back a very long time to see them lose the 200 weekly moving average. 2018 is the last time it happened, but you guys will notice more recently, whenever they come down into it or below, it's always been a very attractive buying opportunity, and now is no different. The business fundamentally is doing fine. They just had to scale up production. They have too much demand, which is the best problem to have, looking for the new daily trend breakout. So are we looking to play? Can we play some short puts down here? High 70s, mid 70s. If you want some shares at a lower price, sure. Call options, same concept. Put a lot of time on them, guys. We've lost the monthly momentum. We've lost the weekly. It's still a weekly downtrend. You got to do a lot of resetting the time frames, and that takes some time, guys. So if you're going for calls, put a lot of time on them. But NVO, I still like a lot. Those are just a few of the names that were really high flying today. Palo Alto was up nicely. The cybersecurity plays overall are doing well. SoundHound rebounding a little bit after NVIDIA pretty much full stacked out of the company, close their entire position. I personally prefer Twilio. The stock price is higher, but I think it's a better company than SoundHound. Their product is better. That's just my humble opinion. Estee Lauder, I think e.l.f. is a much better bet. If we're talking about something e.l.f. Beauty, I still am a big fan of selling puts on e.l.f. Beauty. Mid to low 60s, I think, is an absolute no-brainer right now. Daily is oversold, still oversold at a 20 RSI. This one's gotten absolutely crushed. Unfairly crushed, in my humble opinion. We did their earnings after their earnings. Their earnings were decent, guys. You're talking about a company, they're still growing 20% year over year growth every single year. How can you complain about that? I think they're going to be one of the dominant players in the beauty industry here over the next few years. They continuously gain market share every single quarter. Like, what more do you want? Sure, their China exposure right now is causing them a little bit of pain in terms of that's where they source their products. But the company said many times over the last year or so that if they had to, they can very easily source their products and have them made in places like Thailand or Vietnam, which would not increase the cost that much, although it would temporarily have them relocate their supply chains, right? So there's just a few of the names that we were noticing on the list here this morning. A few of the China names like Baidu was pulling down after their earnings today, down about 7.51. Baidu is not a terrible play. Short puts as well. It all depends if you really want the company, but lower 80s, I see no problem with this one. It's kind of like a catch-up follow trade to Baba. Baba's really been crushing it recently, and just KWeb overall. I have the KWeb calls. You guys know that in the folio, right? I have the KWeb calls in the trading portfolio, and they've been doing quite well. We kind of bought them in the lower locations right here. Now we're finally seeing some profit. Can we rally? Yes, because it's been only Baba. But wait, when the entire China stocks, especially, this is like the QQQs of China, right? we can see some upside, guys. There's a lot of upside to be had on this stock, but I have a very long time horizon, June 2026 or January 2027 at the minimum, in my humble opinion, right? Other places to the downside, I mean, Coin was down, of course. Autodesk was down a little bit. Broadcom just pulling back a little bit. Broadcom for me, still too high for some entries, guys. I do not like it up here. It's still way, way, way too high. Just look at the monthly. We're too far extended from the 12 EMA. Just not a trade that I like to take when we're such in monthly overbought conditions. I think NVIDIA is probably a better bet right now at their current price action levels. Even TSM, if TSM pulls back a little bit, I mean, this is a much more manageable chart. They pull back here and we can get some entries, 185, 190. Wouldn't be opposed to doing that, guys. I mean, this has much better structure as a chart. So first entry would be right here where I was kind of pointing around. This is the 200 daily moving average around 183. And when you compare it with AVGO, it's just a little bit too extended, right? The 200 is all the way down here in the 180s. So I need a bit more of a pullback here on AVGO myself to play that one. That's pretty much all of the, some of the biggest winners, some of the biggest losers. We also covered all the other ones in terms of the the different indexes and the big tech names, of course. So that's just, maybe I'll do these in the future as well. Just run through the biggest winners, the biggest losers. We talked about UNH already coming into a nice level. Chipotle as well coming into a decent level, guys. 52 down to $50. Not the worst proposition. The daily's a bit messy. When you zoom out, you can clearly see what the bulls are trying to do here. It's just monthly sideways consolidation. They ran so fast and so hard over the last couple of years. The valuation is a little bit rich right now. So if I'm looking to play this one, $51.50 around the 26 monthly moving average, something the bulls, have done a good job holding up, at least over the last 4 or 5 years at this point. But I want to be getting a little bit greedy on Chipotle because the valuation is high, right? When the valuation's high, you got to be greedy on your entry. So I'll be waiting patiently for Chipotle to come down there. But all in all, nothing wrong with the stock. And lastly, a stock that's not on this high flyer list because it's only up 2% today. Look at Uber, man. Like, Uber is putting in numbers, right? Another 2.61% day on Uber. I mean, I hate to say I told you so, right? But I was telling people all day down here, guys. I mean, we loaded up the call options down here. Hopefully you guys did as well. I know a lot of my members have been absolutely cooking with this trade after our entries down here. And even for some short put plays. Short put plays were beautiful down here. Short put plays equally around here were absolutely gorgeous. But now, if you're entering here, guys, like, you're chasing. Like, you're actually chasing. Like, this is just pure FOMO. You're late, you're chasing, so keep that in mind. Any pullback looking for a weekly higher low for possible further trend continuation, the best possible trade is if they break this resistance area, which they are right now, but close this weekly above, give me a retest, and then run. This retest location is a better bet than just entering here long and crossing your fingers that it keeps going up, right? So keep in mind, guys, this stock is up like a lot. In the last few weeks, last month and a bit, 35%. Don't get too greedy. This is the take profit area. This is where I myself and a few of our members have been taking profit on this one. So do not buy our bags at the highs, right? I'm just saying, right? Do not be my exit liquidity. Be patient, wait for your entries. And if that's not this one, just wait for a better entry. There's so many stocks in the market, guys. You should never get married to one single trade or feel FOMO for one single trade. That is everything for our high flyer recap list. Now, let's dive into the portfolio, shall we? All right, so looking at the portfolio right now, you will see that we are up a cool 17% year to date. Nothing fancy, guys. No YOLO plays, no home run plays whatsoever. Consistent wheel trades, call debit spread trades, calculated leap call option trades as well. That's the name of the game, right? You guys might remember I've been running this portfolio for that. I started for the YouTube channel, just a trading portfolio to show you guys the strategies that I employ. 2023, we made 75%. 2024, we made 65%. And now we are already well underway this year, 17% to the upside, largely outperforming the benchmark indexes, the S&P and the QQQs, just with very steady, consistent, and conservative trades. You do not need to go full on risk to really beat the indexes, guys. If you have a very consistent and winning high probability strategy and you're patient for your plays. I never chase plays. I never go for the hype plays, and we are still outperforming. So that is a very decent performance. We started off the account 2023, 2024. I was running about $100,000. Some people said that's a bit too much. It's somewhat unrelatable. This year, cut it in half. Started the portfolio with about $45,000, $46,000. Now we're already up to about $54,000, which is a more manageable and more relatable amount. So I mean, we're doing pretty well, beating the benchmarks. In terms of the positions here, well, we'll do a quick little rundown, right? These AMD bull call debit spreads, we had these since September. Obviously, they've bled now to pretty much zero. That will be a full loss, a rare full loss on a position, but a loss nevertheless. I'm always very transparent, guys. I show you the wins, I show you the losses. Now, moving on further, we still have the AMD Leap 140 call, so maybe we can make a little bit of this money back with the AMD calls. I'm still bullish on this position, have a lot of time on these contracts. We'll see what happens. AMZUs, these are the short put wheel trades. 42 on AMZU, which is roughly about 220, 218 on Amazon. Wouldn't mind picking up the shares. They expire this Friday. We'll see if we get assigned. If we do, don't mind getting the shares. And if we don't, well, I'll just pocket all of this premium. The ARC-G calls that I was talking to you guys about, one of my favorite AI plays that nobody's talking about, finally starting to come alive. We're finally starting to see some decent profit on these two call options, but you guys see how much time I have on these contracts for those leap calls. Moving on further, still the 100 shares of ELF that we got assigned at 71. Huge covered call premium into the end of March, getting about 1.5% per week. I'm just holding these. Whatever happens, happens. If we end above 75 by March, I will make 75 plus 529, I'll be out at about 80.3 with an entry of 70.56. We'll make about, let's call it about $1,000 on this trade, just patiently waiting on ELF at the lower levels. We have the ETHU short puts expiring this Friday at $5. That is roughly ETH 2,700. We'll see if we get assigned. If we get assigned, no problem at all. I'll buy $1,000 worth of ETH and just sit on it and run the covered calls. EVVTY swing trade, I'm still in. This company is still relatively down, but still one of my favorite plays out of Europe that is just crushed right now. The valuation is so fantastic. They make so much money, and the valuation right now, the PEG is a 0.94. It's really a no-brainer trade, so I'm sticking with it very confident. FICO is a position I started last week. I'm not too sure if I showed you this one or not, but FICO has been one that I've been meaning to buy just for a swing trade, right? Monthly coming in, monthly higher lows, tapping to the 12 EMA, monthly higher lows are set. The RSI levels are a bit more manageable. Now we just look for that trend expansion. Is it going to run like Palantir? Probably not, but can I possibly see $2,100, $2,200 over the course of the next 30, 60 days, something like that? Sure, and that's where my take profit is, as a matter of fact. You'll notice that I have FICO. I also have SPGI as a swing trade all the way down there, and we have MSCI. These are the financial data providers. So not most, but a decent chunk of the profits that I've made this year, I've been investing in some swing trades from shares on very high quality companies with very high conviction setups as well. GGLL, another short put option on Google. These $40 puts are roughly Google around, let's call it about 180. So this is just 2 times leverage on Google. If I get assigned by Friday, no problem at all. I will gladly take 100 shares of GGLL, 2 times leverage. We also have the Google bull call debit spread leap contract for some expansion, June 2026. So although we're down on those right now, we have a ton of time, still confident on Google. We also have the big contracts on Google expiring this Friday, 185s. We are currently down on the contracts, but overall, Google is maintaining right around that 185. If I get assigned, I do not care, guys. I want the shares in this lower 180 to about 175 range, and I will play covered calls accordingly. So not looking too bad on that wheel position, even though we're down. I don't mind being assigned, and that is the name of the game on the wheel. You have to want to be assigned. New position for the day, we have some grab, $5 puts benefiting from the volatility. 2 contracts, 2 short puts looking to buy the shares at $5 by the Friday close. 20 cents. This is 4%, guys, for this Friday. Very decent trade, small account trade as well, right? That's only $1,000 in exposure, looking for the $5 retest, and I have 20 cents of premium, so my break even will be 480. Literally just looking for possible weekly higher lows, tighten up a little bit, and then go for the expansion. Grab fundamentals are actually quite decent in the grand scheme of things. The company is only trading about a 7 price to sales right now. Decent little play. Uber is one of a major shareholder in this company as well. They have it's part of their other bets, such as Google has Waymo. Well, Uber has a number of different investments in other ride sharing and food delivery businesses. Grab has been up nicely, gaining some momentum right now. Could just be looking for the long side appreciation, but you guys see, I did not go heavy, kept it relatively light for now, and we'll build a position. I'm willing to go up to about, maybe a couple more contracts on this one, right? $2,000, $2,500, which for the size of this portfolio would be roughly a 4% position. So not the biggest trade for me. The Intel here, the leap calls I was telling you guys about, I'm still holding December 2026, tons of time, but are looking good right now. Almost up a 2x on those 3 contracts that we have. Now moving into Intuit. Intuit is a bull call debit spread. Intuit, I mean, the company's been lagging. Yes, they have, but I still like this one, guys. It's a decent little swing trade opportunity for retest of the range highs, right? So do with that what you will. I'm still very bullish on the company. The entry is still live. You get a better entry than me. Just got to be a little bit patient with this one. I have until April to see this one through, so still about 2 months worth of time. Here are the K-Webs. They're currently expanding nicely overall. We're up about, I don't know, about 50% on this position. The MSCI is already talked about. MSCI is a very solid company that a lot of big investors and institutions like playing. This is just a massive breakout retest, guys, on the monthly, right? Breakout, retest, and looking for the expansion. Just got to be patient. It doesn't move like Palantir. So patience I do have, so I will keep these ones live. Microsoft, these bull call debit spreads, well, they're down a lot right now. We'll see if they can recover. Small position for me overall, but we'll see. We'll give Microsoft a little bit more time. On the flip side, I have a big Microsoft contract, 415 short puts for the Friday expiry, or rather next Friday. Microsoft's under 415 right now, so we are underwater on these contracts. Do I care? No. If I get assigned the shares at 415 with a roughly $8 credit, gives me a break even of 407, which is roughly where we are right now. So technically speaking, am I down any money? Not really. We're above my break even of 407, and I will gladly take the shares next Friday if they want to assign me and write some covered calls, especially at the lower end of this range. Similar positions I was telling you guys about this week's top 5 options video, 34 and 35 short puts on MSFU. Easy money. I've been in them for the past 2 weeks at this point, and you can see those contracts are all but worthless right now. If they pull down and assign me by Friday, guys, I do not care. I will gladly buy Microsoft. This would be buying Microsoft $400, $395. I'm all for it. The microns here, we've had these for a heck of a long time right now. They're starting to expand. We'll let them expand a little bit more. NVIDIA bull call debit spread. You can't see the running P&L, but the running P&L is about 57% on these bull call debit spreads. They are good until May. 120 to 125 bull call debit spreads. Fairly bullish. I have an earnings play that I started on Friday. Earnings play, NVIDIA, 150 calls. And when I took this trade, guys, right, I just want to show you, this is a lottery trade, right? Do not copy trade this if you do not want to lose any money. Earnings are an absolute casino. I'm bullish on earnings, but it could go either way. Do not do this if you do not want to lose $500, $900. That being said, I have a ton of profits this year so far. I'm reinvesting some of these profits into a lottery play. The call option is up a little bit right now, looking to hold it through earnings and go for that all-time high breakout. NVO added to my call debit spread position on the Friday session. That was a great idea because now we are now back to roughly break even. Only a tiny loss on those until May. 90 versus 95. I'm looking for NVO expansion into the 90 to 95 range, which would just be a little bit of a monthly bounce. Not asking for too much, right? And have until May to get it done. These Oxy calls are pretty much dead at this point. We took profit. I mean, these were 2 contracts, if you remember, back in October. Took profit on one for roughly almost a 2x. And now this second contract is just dying. So total P&L in the position is probably going to be not flat or nothing, or maybe a little bit of a loss. All in all, I'll just hold this one through March and see what happens. Not a big position. The SOFI, the assigned shares at 16. We continuously run covered calls against the position. My shares at 16, I'll show you. The SOFIs right here, if I go to my assignment tracker in the Discord, you'll notice that our break-even cost is 15.01. Been farming these for a couple weeks in a row right now, so I'm fine. This is a very easy wheel trade position on SOFI. We also have $15 call options and $20 call options for September. Took these before earnings. The stock went down, recovering nicely now. I'll keep these through September, guys. This is once again a lottery trade. Not short-term call options, but still like 6-7 months worth of time. We'll see what happens. SOXL still have this position as well. SPGI have some swing trade shares. This was a beautiful breakout retest, guys, on the daily time frame, right? Looking for that expansion. We hit this one here last week, looking for the daily uptrend, reset, higher low set, and now into the expansion. Beautiful breakout retest, going for the weekly trend expansion, going for the next new leg of monthly after 3-4 months sideways consolidation, going for the breakout on SPGI. Beautiful trade, looking for probably, you know, good like 560, 570, 580 on these to take profit. We're in at 530. TLT, I still have one call that I bought way back in the day, August, September. It's bled out entirely. I'll keep this one, have it till June. It was a hedge against the market, still holding. Trade Desk is up in another position I opened last week late, $75 puts for next Friday. We'll see what happens. We went through their earnings on the channel. I'm a big fan of buying this one in the mid $70 range. So put my money where my mouth is. If we get a sign at 75, I'll gladly take the shares. And lastly, but not least, we have the Square Leap Call contracts. We took profits at a 3x, at a 4x earlier in December, and now we're just riding these two remaining contracts. Have still a year's worth of time pretty much. One of them is covered with a covered call. We've made a lot of money running covered calls, poor man's covered calls against these leaps. I'm just holding. They have earnings on Thursday. All in all, guys, that is your portfolio rundown. That is your full video recap. Hopefully you enjoyed it. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. Would love to see you back here. We do these videos every Monday through Friday, except for when I'm traveling, such as I am right now. This week's videos, Tuesday, Wednesday, and Thursday I will do. We didn't have a Monday session today, or yesterday rather, so I will do the videos today, Wednesday, and the Thursday session for you guys. So you guys 3 times for the week at least, but regularly when I'm back home, 5 days per week. And lastly, if you have any questions on the strategy, on some plays, whatever you guys want, leave them down below in the comments. I will gladly answer you, usually within the first 24 hours. And in the event you guys want access to all of these trades in real time, all the trades, the call option trades, leap call option trades, the share trades, the wheel trades, here are all of the trades since the inception of the Discord. The green check marks are win. The red little circles are tiny losses. I like to let my winners ride and cut the losses early. So here are all the trades since the inception of the Discord. I'm always very transparent with all my wins, all my losses, just running a very consistent and somewhat conservative trading style, but it's been working so far. As I've shown you guys the last 3 years now almost, I've been doing this YouTube channel. Always just slow, steady, consistent benchmark beating returns. That is my personal goal for my personal strategy. So if you're interested in having all these trades, the link to the Discord is down below. And we also do private morning live streams every morning for about an hour and a half, 2 hours, where I trade live for you guys, answer all of your questions on your stocks, your options in real time. If you cannot attend the live streams, they are all recorded, of course, and you can always ask me your questions in all of our chat rooms right here. I'm always very quick to answer. We also do some private videos. People have been finding tremendous value from these private videos, advanced level option strategies, and also how to grow small accounts, various strategies for various account sizes, whether it's a small account or a high 6-figure, 7-figure account, because the strategies are different and I don't often show them on YouTube. Those have been very, very profitable for a lot of our members in there. And also I do share all my watch lists, all these watch lists that you see, all the annotations, all the technical analysis. I share my watch lists, my charts. You can literally just copy them with one click of a button on TradingView. You get everything, all the annotations on all the stocks, my technical analysis, all my chart layouts, all my watch lists, everything. So if any of that interests you, the link to the Discord is down below. And if not, well, I guess I'll see you back on the channel, guys. Pleasure as always. Love you guys. Have a great rest of the week, and I'll see you tomorrow after the close. Peace.